Trivia question. According to our panelists, how are trucking companies adapting to an underwriting environment that demands both safety data and traditional metrics? Type your answer in the comments for your chance to win prizes totaling over $1,000.
Hello, I'm Chad Hemenway, National Editor at Insurance Journal. You know, by many accounts, and maybe we'll hear more about this today, I hope so, the trucking sector is facing some difficult times. Applauded just a few years ago as truckers delivered goods to us during a pandemic, the industry is now facing motley operational and economic challenges. And among them, of course, which is why we're here, is the cost of insurance. But maybe, just maybe, through the lenses of several things, including technology and data, training and education, maybe the pendulum could start to swing. So we'll talk about a lot of these things with our panel here today. So, and hello, everyone. Hello, our audience. Let's start with quick introductions. Mario, I'll throw it to you first. Briefly tell us who you are and what you do.
Hey, thanks, Chad. A pleasure to be here today. My name is Mario, and I head up all things claims operations here at Nirvana.
Excellent. And John?
Yeah, good afternoon. Thanks for having me, guys. Appreciate this opportunity. My name is John Penton. I am a producer and partner here at Truck Writers. Been with the firm for almost 20 years now.
And lastly, Sherry, could you please introduce yourself?
Hi, good morning. Thank you for having me, Chad, and welcome to everybody on the panel here. My name is Sherry McGonigal. I am the Transportation Product Manager for Crawford & Company. I've got a little over 20 years experience in this industry, all things trucking claims.
Yes, we've got a very experienced, esteemed panel today. If you want to learn more about them, you could go to our site. You could go, obviously, to LinkedIn and maybe, click that invite button and make some friends. But first, for this topic, John, let's set the stage and talk briefly about the marketplace. What are some of the current characteristics of the commercial auto and fleet insurance market?
Yeah, great question, Chad. And as you know, it's been a struggle, to say the least. The last few years have been anything but pretty. They've been a challenge both on the underwriting side, obviously as a retail partner in the relationship, delivering that news of yet another increase. It hasn't been pretty across the board. And really, when we look back at where we came from and why we are where we are right now, it's, a lot of it has to do with the 2021, 2022 freight boom, right? Coming out of COVID or in the midst of COVID, where people came out of the woodwork, they were getting behind the wheel, making $5, $6, $7 a mile. Things were good, but with all things that go up, they must come down. So here we are, and a little bit longer than we expected to be here. We're going on close to 3 years now in a freight recession, the longest one in history. I've been doing this for 20 years, and the other two were blips. They felt long at the time, but in hindsight, they were actually pretty quick. So the market is, it's struggling. Making an underwriting profit out there is tough. If you look at these top insurance carriers, they're all struggling. Their combined loss ratios are averaging over 100+%, and that's dollars in, dollars out, and they're not making a profit on underwriting. So it makes it tricky when you're out there delivering that news of another increase, when they're struggling to make money, they're struggling to keep drivers. We keep hearing about the driver shortage. There's so many factors at play that, we're just another expense and their cost that's really, taken away from their opportunity to grow and make more money. So I like to think we're towards the end of this, but I thought that a year ago. So remains to be seen.
All right. Sherry, do you have anything to add to what John just told us?
To John's point, I'm more on the claims side, on the training and development, but I will tell you, to add to what John's saying, is that there still is a little bit of economic uncertainty, within the freight industry, and the demand has been shifting. But I think for 2026, we're going to start to see a little bit of stabilization in that market. Yes, there's rising operation costs and driver retention and turnover and all these kinds of things that are adding to that, including in the claims space, our nuclear verdicts and these kinds of things that we're seeing. But I know we'll probably take a little bit of a dive into that as we go forward, but there's so much that is going on just widespread in the industry that has really hurt the marketplace.
Thank you. Definitely, we're definitely going to get into a lot of that. But John, going back to you real quick, I'm wondering from your broker perspective. You talked about some of the combined ratios that insurers are booking, and I see a lot of that in their earnings, in their quarterly earnings. I'm wondering if you're seeing any reductions in appetite or capacity, maybe just some insurers just pulling away from the line.
Yeah, we've seen, companies scale back, maybe rule out certain appetites or guidelines, types of operations have been reduced or eliminated. I fully expect to see some of these insurance providers to back out, if you're not in it to win it and you're not being creative and keeping up with the times, when you're losing money year after year, you're not going to stick around long. So the ones that have been there and understand the transportation space will continue to be there and carve out ways to do it better and more efficiently. And I know we're going to get to that later in the session here, but yeah, we've definitely seen an initial movement of reduction of appetite and then carriers as well in the marketplace.
Yeah, that's not good news either. So you're you're having these calls with clients, bringing them increases, whether or not they have a robust claim history or maybe not the greatest claim history. And there are less options to choose from, it sounds like. Other than the insurance side, you talked a little bit about it in the answer before. What are some of the other economic pressures and struggles that trucking companies are dealing with, other than insurance?
Yeah, so I think it all kind of goes hand in hand, right? You're looking at these DOT inspections, violations that all play a part in the insurance underwriting side of things. So they're feeling pressure from, keeping drivers safe, right? Keeping the trucks maintained, keeping a work-life balance, if that's even a thing anymore. But yeah, there's a lot of things that go on in the trucking world that we never stop, right? That's why this industry is so unique in so many ways that it has to keep moving. We are essential. We saw that during COVID, how essential this industry is and what our impact is to the rest of the world. I mean, we really have that much of an influence, and it's exciting, but at the same time, there's a lot of pressure and a lot of external forces that we can't always control, right? A lot of it goes as the country goes, as the economy goes, and we have to find ways to adapt and change. It doesn't happen overnight, but I know here on the panel we have a couple good conversations coming up in regards to how that has shifted as far as looking at a risk. How do we handle the claims that are involved with an account versus the traditional way of handling things? So yeah, it's exciting, but yeah, it doesn't come without a lot of pressure and a lot of I guess pressure is the best way to put it.
Right. I realize that a lot of this has to do with claims, whether it's going to be the rise in claims and that's kind of driving up the insurance price. But I'm wondering if you could also give us a little bit of a sense in terms of the scrutiny that clients face from insurers on the underwriting side. Is there an old school, new school shift among underwriters, and how are your clients dealing with that? Because I'm sure there's some of them that are adapting to that. Maybe they prefer kind of the old school, but tell us a little bit about that dynamic, John.
Yeah, so kind of back to the the violations I spoke to. I mean, that all plays a part in the traditional underwriting process. Looking at your basic scores, your hours of service, crash indicator, that kind of thing, to make you can look at that and make a pretty good guess just by looking at the different numbers on how that account has performed historically from a loss perspective. Obviously, once you dive in, look at the loss history, historical 5-year loss history, and then assess their safety culture. Again, you can kind of create this narrative, good or bad, about how that risk will perform going forward. Now, with the marketplace and how it's kind of shifted recently, is we're seeing more embracement as far as the telematics, the ELDs, the dash cams, and how are those playing a part on top of the traditional underwriting methods, right? So it's kind of twofold, right? We have the old way of looking at things, and they still do, right? I mean, it's dollars in, dollars out, like I spoke to earlier. You're not looking to lose money on a risk, but at the same time, if there's a new way to assess a risk above and beyond the metrics that we can see, like Mario's going to speak to as far as the telematic information, what we can look at from a data point on that side of things, and how can they harness that information to round out the narrative on an account, good or bad? Do you want to take a shot? Is there more of an opportunity because you can see more things, there's more visibility, or is it because you can see more information, you're looking to, not offer a quote on that risk because, hey, we know that there's some indicators here that aren't favorable as far as a loss perspective looks. So yeah, we're kind of in that pivot point in the industry where things have shifted and people aren't resisting the change like they did maybe a few years ago with the big brother looking at me. It's part of the industry right now. Telematics are in most trucks that are going over the road. So they've embraced it. It wasn't pretty at first, but we're at a place now where if we can harness that and make it work to underwrite and achieve profitability as an industry while supporting them during the claims process, that's a win for everybody.
Yeah, yeah. Sherry, do you have anything to add there? We talked a little bit about that in a previous call that we had. How some of the technology and some of the training and education is helping these companies improve their risk profiles. Tell us a little bit about that movement and what you do on that side of things.
Absolutely. So this is a deep dive. We could really take a deep dive into this. So cameras obviously play a big part of this, both inward and outward facing cameras. That evidence being, you can't fight what's on the camera, right? So this is going to help a lot of our insurers and our insureds to, be more proactive with, what's really going on in an accident per se. Our collision avoidance technology is superior right now in the industry. And to John's point a little bit earlier, a lot of this, these ELDs and all the kinds of things that we're talking about here that assist our insureds, a lot of it's mandated too. So, there is still a little bit of friction out there because of these mandates. But I will say, and I know Mario will probably want to speak to some of that, but cameras, they don't lie, absolutely. So, and it's not just the equipment, the tractor and the trailer. We're seeing also telematics on our trailers, as well as, with respect to cargo. And that's another area, another threat that I don't know if we'll have an opportunity to dive into, but we have cyber threats now that are on the horizon and that are very impactful in our cargo industry. And so, but to John's point, ELDs, inward, outward facing cameras, probably more outward facing cameras. I think there's still a little bit of friction with the inward facing cameras with some companies, but it's making a difference in the industry, and it will also help improve the insurers or the insured scores as well. When the insurer is taking a look and underwriting is taking at what it's been like over the past 5 years, for example.
Right. Excellent. Thank you. Mario, you've been sitting there very patiently, and I appreciate that. I definitely would like to get to you now because this is, something that I definitely want to learn more about, just because of the manner in which Nirvana kind of tries to tackle everything we've been talking about thus far today. So, Mary, tell us a little bit about Nirvana Insurance and its approach to this risk class.
Yeah, great question. Again, thank you for the opportunity. So Nirvana, came on the market first to kind of solve a problem that was widespread, right? And that is the underutilization of data that was probably already there and had been there for a very long time to frankly give our insureds a better shake, right? Telematics data from an underwriting perspective enabled the underwriter to better understand the account, right? What their true mileage was, where they were driving, where they were operating, and offer them or incentivize them from a premium perspective based off of that data. On the flip side of that, however, we've tapped also to that from a claims perspective. For example, when a claim is reported, almost instantaneously, we have real-time access to Sherry's point, camera data, right? In addition to the telematics, which puts that adjuster one step, two steps, three steps closer to solving something that before a first phone call than they ever were before. When my agents or adjusters reach out to customers at this juncture, they 9 times out of 10 already know what happened in the accident, which enables them to have a much more productive conversation with that insured. And so Nirvana exists to solve a problem that exists in our industry, and we're doing so by the leveraging of data, which includes telematics, camera, and a lot of other things.
How is, obviously we hear a hell of a lot about AI these days. I know that's a big part of Nirvana. I also know that you certainly love claims and love staying in your lane, and you don't like talking, too much about the underwriting side of things. Yep, but how has AI helped in improving the efficiency and risk selection process?
So to kind of echo what you've already said, staying in my lane, right? So the risk selection process, Nirvana is, I had a meeting today, as a matter of fact, where we were talking about, how we leverage and how we utilize AI. And I think regardless of how we use it, the first thing that's always important is to understand that AI in its current state or form is not accurate 100% of the time, right? And so it's about leveraging AI where you see an impact, and then trying to figure out how you better develop AI, train AI to think more intelligently and accurately as it works to assess risk. So I think about, and whether or not this is actually what's happening in our underwriting side, but I think about how long it takes an agent to first come up with a submission to our underwriter, and how long it takes for that underwriter to actually go through that file, and how much of that can be done autonomously before it actually gets to the human. That cuts down that process period of time from submission to quote to bind by more than a third, by using and leveraging AI tools to kind of help automate the flow of that process on the underwriting side. Again, not an underwriter, I'm a claims guy, but if I'm thinking about like the way that we're utilizing our systems today and the way that we're thinking about it going forward, I think that's a pretty good response.
Yeah, okay, so then let's talk about claims. Let's talk about
Yes.
what you're passionate about. How does this technology get used from the claim side to reduce costs, get ahead of some problems before they happen, so on and so forth?
Mm-hmm. Yeah. So we've all heard the saying, picture is worth 1,000 words, right? Well, dash cam footage is worth 1,000,000, right? And it's not always about, our insured is not at fault. Sometimes the cameras tell us a story where the insured is absolutely at fault without a doubt. But what it does is it lets us know more sooner than later, what our game plan or strategy needs to be around mitigating the damages and effectively resolving that claim for the benefit of the insured and the third party, right? We did a recent assessment not too long ago where we were comparing ourselves up against a particular TPA in terms of what we were average paying out on a property damage claim. And we actually saw that on average, we're about 20 percentage points better in terms of what our payout is. And I think that is attributed in large part because of our ability to really get into the weeds and into the detail of what the damages actually are much sooner. So think about Think about cycle time being drastically improved, which has an impact on rental, which has an impact on tow and storage, which has an impact on loss of business or revenue, right? The quicker we can use video to, one, make coverage decisions or liability decisions around what happened in the accident, that makes the adjuster that much more informed to and incentivized to resolve these claims so much quicker, which actually results in lower payouts, which has an absolute effect on renewals. We all know that when renewals come up, a large part of that conversation is not just rates that were taken, but also how that customer performed with us for that year period of time, which takes into account claims, right? And so if the loss payout is lower, that insured is likely or more probable to have a more favorable renewal rate when it comes time for renewal.
Right. Sherry, I want to throw it to you here quickly, if I can, just to talk about the claim side of things. How important is it to respond quickly to a claim? What is on the line?
Well, and Chad, would you mind if I just want to bounce off of something that Mario said?
I wouldn't mind at all.
And
Yeah,
I think
absolutely.
I think it's really important to underscore some of the things for our trucking companies, and as we go forward in the future, that yes, cameras, inward, outward facing cameras, it gives us a timestamp of what happened, on a particular event. But it also can show a lot of other things to our underwriters and those that play in that space. It shows erratic driving patterns and, was the driver, on the road longer than he or she should have been. And, just leading to a space where we want to really dive deeply into what's driving these liability claims. And I think also the proactive monitoring is going to be important for our fleets, as we get into 2026 and, to uncover some of the driver behaviors. I mean, this is a big play in underwriting. And also, to John's point earlier, he spoke just briefly about, the driver shortage out there. This is also going to be a great tool, telematics in general, to train drivers, new drivers, especially during their initial process of becoming acclimated to the road. So, and also, again, bouncing off of Mario, claims defense, fraud reduction, improving driver safety, and even some of our carriers out there that have challenges with some of their equipment, which also plays into that very important tool as we go forward. So I just kind of wanted to bounce off of that, really quickly. Back to your question.
I very much appreciate that. Thank you. I want to stick with claims, but I want to talk about something I found interesting, Mario, with a survey that your company recently did was around claim satisfaction. Point of it being, there aren't a lot of people who are satisfied with their claims process. So I am, first, what does this mean to you? How does this motivate you in terms of, it was overwhelming. So there could be a lean toward satisfaction or dissatisfaction. This was pretty overwhelming in the terms of dissatisfaction, the way that the marketplace right now thinks about their claims. And I'm just wondering what you generally think about that, maybe what's kind of standing in the way of that, and what you might be doing to change it.
Yeah. So I've spent a lot of time actually talking to our insurers, talking to our agents, and talking to brokers. My job is no longer just about handling claims when they come in, but having proactive conversations with our insureds at the time of bind about what the claims experience needs and should look like for them and their own personal needs. I think as much as anything, what I think a lot of customers are saying in that survey is that they don't feel enough advocacy on behalf of them from their insurance companies when losses happen. At the end or at the beginning of every day, what John does, what Nirvana does, is we sell a promise, right? All roads lead to claim. So that way, when you have a loss or when you have an event, they expect your insurance company to show up. And a lot of ways, I think claims has really dropped the ball. And I'm not talking Nirvana like specific. I'm talking about the industry as a whole. To John's point earlier, I think truckers are significantly suffering, right? And so they understand probably now more than ever how loss ratios impact their renewal, and they're trying to find every opportunity to scrimp and save. And so when your insurance company is overly paying claims that they shouldn't pay, for example, right? They aren't advocating strongly enough for you. They aren't hearing your side of the story in a way that makes you feel heard and respected. That stings a little and that burns a little, right? And so I think insurance companies at this point have, we're in a pivotal spot where we need to, one, better understand what the customer's needs are by hearing them very clearly, by being better advocates for them, but also trying to figure out the right blend between this whole AI and autonomous claims handling and the people intersection part of it, right? I had a conversation the other day with an agent about, hey, I'm thinking about doing claims in this way. Do you think your insureds would want to speak to us as much as if we're able to resolve a certain portion of their claims in this cycle time? And for that particular agent, he felt that a consistent human-to-human interaction was still extremely important, right? And so as we're moving into this direction of autonomous claims handling, leaning heavily into AI to make things more efficient and faster, there is still the desire where we need to strike an appropriate balance between giving the customer exactly what they need in terms of human interaction advocacy and speed and time. Because all of it, I think, makes up for the very best experience that the customers are looking for.
Yeah, that balance is interesting to me right now throughout the whole insurance industry right now, to tell you the truth. But John and Sherry, I also want to talk to you about this particular topic and about John. I mean, is what Mario talking about and what that survey said, does that ring true among your clients? What is their general feeling about the way that the insurance industry is handling their claims?
Yeah, 100%. Mario hit the nail on the head there. I mean, there's so much friction when it comes to when there's a claim, right? Whether it's at fault, not at fault, it could be something very minor. But if the communication isn't there, or if the efficiencies aren't there, then they're sitting there going, hey, we're paying all this money monthly for insurance premiums, and we're getting what in return? And so that's always the hard part, right? You can come in on the front end and sell them a good deal, but what is a good deal, right? Is it just a number at the bottom of the quote, summary, or is the good deal that you're getting the support, the resources you need, that when things happen, because they're going to happen, we're in trucking, you're going to have a claim, and it could be minor, and it could be a huge catastrophic loss, but at some point you're going to experience something where you need to get a hold of a person that's involved in the claims cycle. So to Mario's point, if you can combine the human element with the technological side of things, where those are coming together to create this streamlined way of handling and responding, that's a win for everybody. Because nothing I hate more than getting a call saying I can't get a hold of an adjuster. That adjuster didn't talk to this adjuster. It's the same claim, but he does cargo and this guy only does FISDAM. Then I'm in the middle of something that I shouldn't be in the middle of. The insured's, pissed off, and here we are, and we go round and round, right? So it's just another bad experience in an already touchy area of insurance that people don't like anyway.
Right. And they're having a bad day, right? It's a terrible bad day for them, and now it's maybe going to get worse. But Sherry, obviously, this is something you do. Crawford does. The claims side. I'm wondering what you're hearing as well from from this industry sector in terms of what they are looking for out of the insurance industry to make them more satisfied with that process.
Well, and you're absolutely correct. On everybody on this panel, we all agree that the human factor is present, and we cannot rely on it on artificial intelligence to adjust claims. Maybe to some degree, we're talking about transportation claims here specifically. I think in some areas it's very important to process claims, efficiently and you know, and in a manner that moves them along quickly. But in trucking claims, it's a completely different animal. It's always the sort of elephant in the room that insureds and even insurers for that matter don't want to talk to. Is when you have that catastrophic loss. And what are you going to do? And you're hoping and praying that, John's hoping and praying he's not going to get that phone call in the middle of the night at 2 a.m. Hey, I can't get a hold of anybody and that type of thing. But really where the breakdown here is, and I think everybody agrees, is that we have to train the industry better. And for those of us, especially for everybody on this panel, we've all been in this industry a very, very long time. And it's time now to really take the opportunity to drive down in education. Trucking claims they're different. They're just different in every way. And I promised Chad that I didn't want to make this into a 3-minute commercial about Crawford and Company, but again, I'm going to just put it out there. We do training and development 4 times a year, 3 to 4 times a year. And I think we'll do the same for 2026. And we have a very interactive both online classes and in-person classes in our home office, where we actually bring a tractor and trailer in along with some of our biomechanical engineers, and we talk about all things trucking, and we let our students touch the truck and get up in the driver's seat and take a look at what that looks like for the driver, when an accident occurs. And I think we have to get back to basics, and if we have an understanding of what the truck driver really goes through, what's all about a tractor and trailer. A lot of us, we see a truck and trailer on the highway, and that's all we really know about a tractor and trailer, right? But we really need to get down to training in an organic way and make it impactful for our adjusters to be able to handle trucking claims in the future. And I think this has that trickle down effect that John was talking about, and Mario too. You're going to get this kind of feedback from people that I'm super unhappy with my claims process. And maybe part of that is because we haven't spent enough time educating people from that very fundamental piece and all the way up. In my classes, I teach, one-on-one trucking. We have small classes, interactive classes, and we start from trucking 101, the basics, of what a tractor and trailer is, and we move all the way up into advanced trucking, where we're now talking about autonomous trucking claims, which we are seeing some of those now with autonomous vehicles on the road. I didn't want to have the audience confused about when we were talking about autonomous intelligence with claims as opposed to autonomous vehicles. So it's very complex, and we need to have these adjusters in place that understand the fundamentals so that we can fight nuclear verdicts and these kinds of things that a lot of our clients are facing right now that go back to the underwriting issues. And in my opinion, honestly, it's not if you're going to have a catastrophic event, it's when. And by golly, you want to have all of your ducks in a row, right? For your client when that happens, that you're able to provide them with the best of the best, be it an on-scene adjuster, a defense attorney, accident reconstructionist, and all the different players that are involved in the thick of the claim when that event does happen.
Mario, I'm wondering your thoughts there as you hear, I'm listening to your face and as Sherry's speaking, and I'm wondering if you have anything to add there. It's interesting, obviously, to me, a lot about what she said, and I'm wondering what you're thinking.
Yeah, no. I think that she is right and proper in her assessment. that trucking claims are vastly different or considerably different than some of the other industries that we might have touched. And for that reason, additional focus and training is needed around that to give adjusters an additional perspective. And Nirvana definitely takes that very seriously. For example, many of us attend, and I don't know if I can say this here, but like claims college done by the institutes. They have a school of transportation that I actually personally went through myself and just completed this past year. Not necessarily as a novice, but as a refresher, right? A class taught by industry professionals, by adjusters, by accident reconstructionists, by defense attorneys, and the like. And so I think that is important. But I also think the flip side is important, right? As we're educating adjusters on how to handle them, I think educating our insureds on avoidance and what that process also looks like. One of the things I think that Nirvana does really, really well is we have a safety team. And our safety team not only connects with our insureds at the time of buying, they'll go out and they meet with them, but they have quarterly, sometimes monthly visits, depending upon what's going on with the fleet. When they'll go in person and they'll talk through their scores and they'll talk about the trends and the behaviors that they're seeing that could ultimately result in a claim one day to help deter or help them improve to avoid that claim or to mitigate that loss in the future. I oftentimes will go with our safety department, especially if it's an insured that we're seeing a pattern or certain claims types around, and I'll personally go with my safety person, and we will talk about a plan for that particular insured because, to Sherry's point, training and development is important, but I think it's true on both sides. I think it's a both and not just the insured piece.
Well, that makes sense. I mean, that everybody should be always learning. So why the hell not? Absolutely, education on both sides. But John, I'm wondering I'm wondering what you're seeing from your insured side in terms of education and training. We've talked a lot about improving a risk profile. Right now, maybe that doesn't equate to the largest premium decrease in the world, but it could get there. And obviously you're doing that anyway because you want to run a safe company to begin with. But I'm wondering from the client side, is there enough training and education?
Yeah, that's an area that we, at Truck Raiders try to help them understand that, hey, you can control a piece of that narrative, right? It's not just you versus the insurance company. There's definitely ways that you can look better and not just purely from a telematics standpoint, but also the visual, effects of, do you have a safety culture? Do you have a manual? Are you meeting with your drivers, right? Is there training, ongoing training? All these things help build that narrative. So when someone like myself gets a hold of your account and is working hand in hand with you, I can sell what you're doing on that side to underwriting to get a better, not always a better price, right? Because it's still based on loss information, but they can look at it maybe a little bit differently because they have more intel. So I think, people ask me all the time, what can I do to trim my insurance? Because every year you keep coming out, it's 10, 15, 20% increases. What can I do? And I always say there's three things I would do right out of the gate. And this is well-known information, but it's a good reminder that update your MCS 150. That's the first thing you should do, right? So as you grow, and I think most companies are looking to grow, it's been challenging as of late, but as they grow, update that, not just when it's required every 2 years, but update it. Update your mileage, update your unit count, because that all plays an impact in how the violations are calculated, how that affects your basic scores, right? So if you're in a different peer class or peer pool, it's going to look different at 2 versus 10. And you want to be compared to equal size carriers. So if you're not updating your MCS 150 to reflect the right unit count, mileage, et cetera, you might be lumped in the wrong peer group. And as a result, your scores look a little wonky or inflated because of that. So update the MCS 150, make sure that's as close to accurate as possible. Number 2, I say, pull the PSP reports. I mean, that's so simple. Don't hire that next issue, that next claim, that next driver that's just going to go rogue and drive up violations and say, see you later, enjoy those the points for the next 24 months while they sit in your record. Pull that PSP report, get that information in front of you so you can train or eliminate. Some of these guys just aren't worth your time. And if you can nip that before they even come on board, then why wouldn't you do that? So I always say, pull the PSP reports, make sure that you're analyzing the last 3 years of their inspection history. And then lastly, data queue. Make sure you're challenging these inspections and claims. Mario talked about the dash cam and how that plays a part of claims, but also it plays a part of challenging, these violations and DOT recordable losses. Because if you've got a claim where you're clearly not at fault, you're hit from behind, for example, the car that hit you was squarely at fault, but they had to be towed from the scene. So now it's DOT recordable. Well, you're not at fault, so why not just say, okay, we've got either dash cam footage or there's a police report, submit that and challenge that information, because if you don't, it's going to show up in that calculation under crash indicator, which could play have an impact on your rates. And do brokers want to use a company that's got a higher, a crash indicator score? So it really is such simple things to do, but it does take time. You got to know where to look and how to attack it. But that's where we, as truck riders, here's my plug for our agency. We help our insurers understand that and what they can do to help lower those scores and make them look more appealing to the underwriting side of things.
Right. Yeah, that all makes sense. Mario and John and Sherry, I very much appreciate your time today and answering everything. We've covered a lot of things, maybe nothing very deeply, but we've covered a lot of topics, and I really appreciate it. And I'm happy we talked as much as we did about the claim side of things and what's going on there in the trucking industry, because I think that's a big deal. I think we should meet again and talk more about that and talk about some of the other angles in claims. We could probably definitely do another hour on litigation and nuclear verdicts and those types of things. That's for sure. But John and Mario and Sherry, I want to thank you very much, and have a nice day. Thank you, everybody.
Thanks,
you.
Chad. You too.
How are trucking companies adapting to an underwriting environment that demands both safety data and traditional metrics? Type your answers in the chat. Stay tuned for the Nuclear Verdicts panel coming up next with hosts Alan Lehman and Ezra Amaker.
Insurance professionals work hard every day to keep people safe, but as technology transforms the industry, how can insurers protect not only their clients, but also shield themselves from ever-changing cyber risks? My name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber podcast, a monthly look into how the world of cyber and the business of insurance are connected.
The 2025 Insuring Cannabis Summit, now available on demand. Replay this info-packed conference all about the unique and fast-growing business of insuring cannabis, hemp, and CBD. This summit includes cannabis and beverages, risk management, employment, compliance, claims, legalization, and more. Don't get left behind in the cannabis beverage industry. Replay the event panels with top experts in cannabis. Hosted by Claims Journal's Don Jergler and Insurance Journal's Andrea Wells. To watch the replay and to view the entire list of speakers and sessions, visit insuringcannabissummit.com.
The InsurTech Summit 2025, presented by Carrier Management. Available on demand now. Join industry leaders as we explore overcoming legacy systems, integrating artificial intelligence, legal pitfalls, and insurer-insurtech collaboration. Hosted by Elizabeth Blossfield. Deputy Editor of Carrier Management, Andrea Wells, Vice President of Content at Insurance Journal, and Alan Lehman, Content Editor of Carrier Management.
Don't miss this new episode of Between the Lines. AI on the front lines of disaster risk management, on demand now. As climate change intensifies natural disaster frequency and severity, insurers are turning to AI technologies to proactively manage risk, ensure regulatory compliance, and fulfill their duty to policyholders and communities. You'll hear expert advice from Phil Korecki, Chief Technology Officer at Insono, Kristen Noonery, Chief Executive Officer at MyCOI, and Michael Ballarezo, Founder and CEO of Adjusto. Watch the on-demand video at carriermanagement.com/research.